Hi everybody, Alex Deployer from Expert Forex, and I hope this video gives you lots of money-making Forex trading ideas. In this video, we're going to review the tradable RSI and possible changes that need to be made to the settings of this RSI. And the reason for that is that there were some changes made about a month ago, and they are not working as well as the settings that were used prior to that. So we're going to investigate possible setting changes for this RSI EA. Now, I must mention that when traders trade EAs, they are fixated on optimization activities. So the first knee-jerk reaction would be, no, let's re-optimize the EA and find more suitable settings. I don't really like that. I like analyzing what the market is telling us in the last 2 months of trading this particular RA, and then making changes based on logic, analysis, and that type of thing. So that's the way I optimize my settings, rather than do a optimization exercise that results in highly optimized settings. So let's have a look at what's going on here. The EA overall is performing quite well. It has an 80% success rate. It's generated almost 3,000 pips, but it has had recently a few drawdowns. Although not serious, they're still nicely positive compared to the overall trend that's happening. But how can we improve this? Now, the first thing that I do is I go to the analysis section of FX Blue, and it will then show you the results of the currencies that I'm trading, sorted really any way you want to. So I'm going to sort it by net profit, and we'll just sort it there. So there are the loss-making currencies, and at the bottom here we've got the profit-making currencies. So that's the first step to do, and you see if there's any consistency about the loss-making currencies. Obviously the euro plays a bit of a role there, and consistencies about the profit-making currencies. Now, in this particular video, I'm going to be taking an approach that says, should the volatility of a currency be taken into account when creating EA settings? Because all of these settings use the same target and the same stop. Okay, to give you an idea of the settings, I'm using a 4 RSI setting. For a buy entry, we wanted to go below the 10 line and then cross over from below to above. The opposite, we want to exit if it gives the opposite setting. So if it goes over the 90 and crosses from above to below, then we want to get out of the trades. And the opposite settings are set for sell settings. So they actually, you can't have a buy and a sell at the same time. Very good for US traders. Then the trade after loss, if it makes a loss, then for instance, if it makes a sell loss, then the EA will only allow a buy transaction to occur for the next transaction, and that is actually to prevent the EA from entering numerous with the trend trades. The maximum spread is 12. We're only relying one entry per currency, but that already takes care of that. And the percentage of account is 1.5% of the account, because it has an 80% risk. But what we are really looking at today is this little area here, which says the initial stop currently is 180, and the take profit is 160, and the break-even stop is roughly 25% of the take profit, and the trailing stop starts at 50% of the take profit. And those are the settings we're going to be looking for, because at the moment these are blanket settings for all 28 currencies, and my gut feel is that you should be adjusting these settings for the volatility of a particular currency. So let's move on and have a look at how we can do that. Firstly, we need information, and here on FX Blue is the information, some of the information that we need. We know which currencies are losing, we know which ones are winning, but there's no indication of volatility in this one. So when you're in this tab, you can download the information that is displayed, and there's a lot of information that I haven't even touched on. There's a huge amount of information of your closed trades. So you can download that, click on there, and it downloads an Excel spreadsheet of this particular information. And what that then does is that you can sort and rechange it and make changes and add information that's missing, and then try and make some form of decision. So that's what I've done. I've clicked on download, I've downloaded, and it's gone into an Excel spreadsheet. And here we are. Here's the Excel spreadsheet. I've already made a few changes to the spreadsheet, and I've eliminated information we're not going to be using for this, and I've added another column. Now, firstly, what I've added is I've added a 5-week volatility, 10-week volatility number, and I've manually entered the volatility of each particular currency in. So, yeah. The old-fashioned method still works. You just manually enter them. Where do I get this information? So I get this information from going to the 360-degree market view. I look at the ATR indicator. I do a setting for 10 weeks, which is 60 candles back on the daily, and then I sort the daily, and it will then give me the average trading range of each particular currency. I can see which is the weakest, and I can see which one's the strongest, and then I take that and I manually entered that into the Excel spreadsheet. So that's what I did there. That's where that information comes from, and there you can see it. So the first thing to do is really get a feel of what's going on here, and what I've done is I've sorted the spreadsheet into net profit. So the biggest loss is up at the top, and the smallest loss is at the bottom here. So the theory now is, it says, does volatility play a role in this? So let's just have a look at the volatility, and you can see, let's have a look. We've got 9 losers here, and what I'm going to do is I'm going to have a look at the volatility of those 9 losers. So all I do is I go like this, and I highlight that, and Excel will add that up for me and tell me what the volatility is. And the volatility is 673. So I'm going to actually losers 673, and that is how many losers? 9. We said 9 losers. The average the total volatility is 673. So I'm going to go to the bottom here where all the winners are, and I'm going to do the same exercise, and this time I am going to and I'm going to go for the top 9. So there we are. So it's 3, 6, 9. Okay, so there's the volatility of the winners. So we go and have a look at what the volatility of the winners is, and it is 590. So we're already getting a feel of that volatility does play a role in that the lower volatility currencies have produced the winners, and the higher volatility currencies have produced the losers. And that's a total generalization. The other way of interpreting this information is to say that these currencies at the bottom here that are making really good profits, the settings for those currencies are more or less correct. And the ones at the top here where the settings are producing losses, we can say that the settings are incorrect. So what we must do is we must make these guys look more like these guys. Just an aside, what I've also done from the spreadsheet is I've analyzed which currency, not the currency cross, which currency has been the most profitable, and interesting enough, the CAD has been the most profitable currency, and the franc has been the most profitable, the second most profitable, which is strange about the franc because the euro has been the least profitable currency, and they normally mirror each other. So that's quite strange that that's happened. I can't draw any specific conclusions from this, and we don't really want to eliminate currencies out of this trading, but we just need to be aware that the euro and the yen haven't performed as, and the Oz haven't performed as well as they should have, and that's and the CAD and the franc and the pound has performed very well. But that's an aside from this analysis. So let's go back to our initial. So what we're saying, the settings are most appropriate to the bottom, the most profitable ones, and the settings are the least appropriate to those ones. So one of the things we can do is we can say, okay, I'm going to add a column here, and let's just add the column in there, and like that. Okay, so now let's just fill in the stop, target, break even, trailing stop for the winning currencies. So that would be 180 is the stop. The target is 160. And the break even starts at 40 and the trailing starts at. So that seems to be a good formula for a currency that has a volatility of around about 49 pips. We can also say that those settings are most appropriate to currencies that are having 100% success rate. So I'm going to just copy those settings into the ones that are currently having a 100% success rate. So we just go like that. We don't want to disturb ones that are doing well. If you look at it, you'll see that most of these have got very low volatility. So we're not disturbing too much by doing that. There might be there's one exception here, the Euro CAD, which is slightly higher, but we're not going to disturb that particular setting. And here's another one, and that's also 50. So you can see if we apply the existing settings to the winning currency and the 100% ones, and there's another 100% one, oops, lost it, then we do cover, we take care of the winning currencies and the 100% currencies. Now this one is an exception. It has only got one trade behind it, so I'm not 100% sure if we need to adjust this. I've got a feeling that needs to be adjusted. That particular one has had 7 trades, 7 winners. Don't touch that one. So what I'm going to do now is I'm going to say, all right, what changes do we need to make to these guys to make them more profitable? Okay, so what I'm going to do is, I'm not going to proportion the ideal settings to the volatility of that, because I can see there isn't a exact relationship, because we've got some high volatility currencies and we've got low volatility currencies making losses, and the same thing here, we've got high volatility currencies making super profits and very low ones make. So the consistency of volatility is not that apparent, but what is apparent is that the lower volatility currencies are producing more consistent and better results. So what we need to do is we need to up the settings for the high volatility currencies. And what I'm going to do is I'm not going to go overboard. I'm going to go up to, let's say, 240 for the very high ones. And I'm just going to show you which ones I'm going to go do 144. And that one I'm going to change that winning combination, and I'm going to do that one too, And obviously these are problem children, so I'm going to do those ones too, and that should work for that one. So what I'm going to do is I'm going to take that as a portion of the target and take into account the new target. So that should give us, all right, so that gives us the new target, and the break even is basically 25% of the target, and the trailing stop is 50% of the target. Okay, so that those are the new settings I would use for the more for the losing ones. So I'll just copy that formula down to the next batch, to that one, and then even to this one. Okay, all right, so let's have a look. So we've cleaned up, and let's see if we can go even further. 90. Let's see if there's any other ones that need adjusting. And then we have these middle of the road ones that we need to decide what to do on, about whether to either keep them the same or adjust them according to their volatility. And let's have a look if there's a consensus about the and they all fall in quite low volatility, except for that one, or they all fall in very low volatility. So this suggests that it's not the target and stop that's causing the losses. It might be other considerations. Now, one of the other considerations is that it must be more difficult to enter those kind of deals. So for instance, we could, instead of 90 and 10, we could make it more difficult. We can make it 92 and 8. So we could consider, and I'm just going to consider that as a possible 92 and 8 as alternative settings for the RSI. 92. The other alternative is to make the RSI 5, which makes it more difficult for those to reach the RSI reading. But 92 and 8 I like a bit more. Suggest that instead of changing the settings on those, I'm going to just change the setting there. Okay, and I'm not going to worry about the ones below because they are making a profit. So those are profitable, but not. So let's have a look at the low success rate. There's a 67. I'm going to make that a little bit more difficult to enter trades in that currency. That one's success rate is not bad, not bad. Okay, so instead of making changes to the actual stops and targets, we're going to actually just make it more difficult for some of the losing ones to activate. So essentially, I'm going to stick to the original settings with those particular ones. Copy, and we're going to just paste the numbers. And then we've got a few that are still outstanding. We need to make a decision on those. Let's have a look at that. The yen. Yen is pretty neutral. It's had an 85% success rate. I think we can keep the yen as it is. The New Zealand yen, reasonable success rate, keep that as it is. And the franc yen, reasonable success rate, keep it as it is. And then this one, the franc, that's quite a low volatility currency, reasonable success rate, 88%. Let's not disturb that one and just keep it as it is. Okay, so yes, it's a bit of a trial and error basis that I've used here, but these are some of the changes that we can make to improve the results, hopefully improve the results of our trading. Then one small refinement where the success rate is particularly low, I'm going to increase the stop size. So for instance, that one, I'm even going to make that 160. No problem with that. And let's have a look, 62% success rate. I'm going to make that maybe 220. So these are all refinement adjustments. Here we've also got one that's a 78% success rate. I'm going to make that 200. Just sort of ad hoc things. And let's see if there's any. And then these 50s, we've already made those changes, but I might just knock that up to 200. And that one is fine. That one's pretty low, but it hasn't had many trades. I'll knock that one up a little bit. So this is the way that I'm going to review the settings, and I'm going to make these changes today in on my trading. It's a lot of EAs that I'm trading, 27 of them, but these are the changes I'm going to be making to the settings. And let's just see if there's any other setting that needs attention. And hopefully these changes that I'm making to the taking the volatility of the currencies into account, their past trading record, will improve the results of the trading by reducing losers, increasing the impact on winners. As I mentioned earlier, sometimes this kind of approach is a much better approach than trying to optimize the settings for each of these currencies. And I would seriously suggest that if you know the EA that you're working with, that you follow this kind of approach. Just a reminder that if you would like to, you can link your account to my trading account. I have committed quite a lot of my own money to this particular EA. I believe it has a long-term future. And if you want to have if you want to link your account, use the link provided. Thanks for watching this video. If you've liked it, please give it a like. If you haven't subscribed yet, subscribe and click the bell. But most importantly, share this video. You can do this in many ways. Message your friends, send them emails, or share it on social media, on Facebook, on Twitter, and those kind of places. So from me, Alex Deploy, cheerio.